a side hustle or run your business in addition to your 9 to 5, you do not want to wait until tax season to think about your finances. All it's going to do is cause you panic and cause you pain. In this video, I'm going to give you the one habit that you can implement now that, when done correctly, can help you save thousands of dollars and give you peace of mind at tax time. My name is Keisha Rondino. I am a real estate and business CPA and tax strategist. I teach you how to use a tax code in order to pay less in taxes, keep more of the money you make, and build wealth in your business and your investments. So let's get into it. So if you have a side hustle, whether it is selling real estate, renting a property, flipping houses, or have some other type of service, you're making money, which is what you absolutely want to be doing. But if you don't develop the right way in order to run that, when tax season comes, you will be scrambling and maybe owing more than you thought you would, and maybe having penalties associated with it as well too. And nobody wants that. So what habit am I talking about? It's simple. Tracking and separating your side hustle income and expenses all year long, and not trying to do it all at tax time in April. So why is this important? Because when you have a side hustle, that income is taxable. If you don't track it correctly, then your tax filing can be incorrect, and you don't want that with the IRS, because then that comes with problems down the line. The second reason is that, unlike your W-2 job where taxes are withheld, when working your side business, you are your boss. You are responsible for making sure the IRS gets what they expect, which is their portion, also known as estimated tax payments. And the third thing is, if you wait until the end of the year to pull everything together, you will end up stressed, maybe missing some deductions, and probably owing more than you expect. So if you are a real estate professional, let's say an agent or an investor, you may be juggling multiple streams of income, whether it's with your properties, whether it's endeavors within your side business. I am sure your bookkeeping can get pretty messy, but if you build this habit, you'll reduce a headache big time. Bottom line is that you can track it all now and stress less later, because when you have clear records, that equals more deductions and less chances of surprises with how much you may owe to the IRS. So let's talk about what this looks like in practice. I'll walk you through the steps that you can implement today. Step 1 is going to be opening a separate bank account just for your side business. Now, once you open up this bank account, it is going to be specific to whatever activity that you have going on with that business. And having this separate bank account means that you're not going to mix personal transactions with business transactions, which is what the IRS wants. They do not want you to mix it all together, because that's called commingling funds. And the IRS really hates when you commingle funds. They absolutely down on it. So you don't want to commingle your funds. Once you have this bank account set up, it's actually going to help make your bookkeeping a lot easier and help you classify your transactions more smoothly. Step number 2 is that every time that you make money within your side business, you are going to track it and put it into this bank account. So if you are a real estate agent, that means that whatever commissions that you receive are going to be deposited there. If you are a real estate investor that has rental properties, then your rental income will go there. Or if you have any other type of service business, whether it's e-commerce, whether it's consulting, any income that you receive, you are going to deposit it into that account. The third thing is, whatever expenses that you do have for your business or that you need to incur for your business, you are going to use the same bank account in order to process those transactions. So if you have any advertising, if you are traveling for your side business, if you have to buy supplies, you do some marketing, you're buying software, all of that is going to be processed through that same business bank account that you have been putting your income into. Step 4 is going to be set aside a portion of your income for taxes. Yes, this is where the IRS does come in. Because no taxes are being withheld from you automatically, you do have to do it on your own. And you do not want to miss this step. The first step is doing estimated tax payments. So on a quarterly basis, you're going to take the income that you made and you're going to subtract your expenses out of it and determine what your net income is. Once you have determined what your net income is, you are going to pay the IRS an estimated tax payment based on that amount. For many side businesses, setting aside 20 to 30% is a good benchmark for it. You may be less than 20%, you may be over 20%, but being within that range is going to make sure that you are paying the IRS the right amount of what you should be paying to them. Because if you do not pay them the amount that is due to them, there will be a penalty that is associated with it. And we want to avoid all penalties. We don't want to give the IRS any more money money than they should be receiving. The fifth step that you're going to do in this process is review your transactions and the financial activity that you have within your business. So once a week, you want to take about 30 minutes to update and review your income, update and review your expenses, and see exactly where you are. When you know your numbers and know where you are from a financial standpoint, it helps you make smart decisions in your business. Without knowing exactly where you are basically just operating from the seat of your pants. Like you don't know where you are, you don't know what you want to accomplish, and you're just operating like a robot, just going and going and going. So it is important to know where you are. It's also important to have some goals, but it helps you make smart decisions in your business so you can know if anything needs to change when it comes to accomplishing your goal. Doing all of this means that when tax season comes, instead of scrambling to find receipts, you are going to be ready. You will have clarity on what you earned, what you spent, and what you can deduct. Now, if your side business results in multiple streams of income, then you have a couple of additional items to keep in mind. You will want to make sure that the income that you are receiving overall in the side business, whether it's the main activity doing your side business or whether it's the sub activities that you're doing in your side business where you're getting additional money for, you want to make sure that it is all being recorded. So if you are a landlord and you're renting out properties, you will most likely have quite a bit of expenses, repairs, property management from a housing standpoint. If you have multiple properties, then you're going to have income and expenses for each property, which means that you need to track and know what took place with each of those properties. So it does need to be separated out. The same if you are, let's say, a real estate agent or a business owner. You may have additional side income, including referrals, or you may do part-time consulting, depending on what your specialty is. You may have written a book, you may do some teaching, or you may have a course that you're selling. All of that needs to be separated out, and it does need to be tracked. You're not just going to track the main income that you make, you're also going to track the income and the expenses from the sub activities that you do as well. And the reason why you're going to separate them out and record them is because you want to have clarity. You need to have clarity with where your money is coming from, which activity, as well as what you're spending money on. Let's say that your side hustle does so well that it moves from being a side hustle to a overall small business. That would be absolutely wonderful. And if you start now and get into the process of putting these habits in place, then as your business grows, you will be in a position to know that you're operating it correctly, to make sure that all of your information is classified correctly, and it will also ensure that you have clarity to how you are growing. These habits may seem a little difficult at first because it's not something that you're used to, but once you get started and the more you do it, the easier that it will get for you. I hope this video has been helpful for you. If you want more information about these habits and processes, you can use the link below in the description box to download your side hustle tax checklist. This checklist is going to go through the things that I discussed today in this video and help you stay on track when operating your side business. Also, make sure that you like this video and subscribe. And if there are any other topics that you are interested in hearing about or you want me to speak about, and make sure that you drop a comment below. I would love to hear from you. I look forward to seeing you in the next video. Bye.